Welcome back to the channel. Today, we're diving into the world of undervalued cryptocurrency projects. It's kind of like treasure hunting, except instead of digging for gold, we're searching for digital assets with explosive potential. Before we dive in, it's important to note that investing in early-stage crypto projects comes with high risks, but also the potential for higher rewards. The crypto market is highly volatile, so always proceed with caution. But with the right knowledge and a whole lot of research, you can potentially find projects that are truly undervalued and poised for growth. We'll talk about what makes a project undervalued, the tools and strategies you can use to find them, and most importantly, how to make sure you're not falling for a scam. What does it mean for a cryptocurrency project to be undervalued? Think of it like this. Sometimes a company has amazing products, a solid team, and a bright future, but for some reason, the stock market just hasn't caught on yet. That's an undervalued company. In the crypto world, it's the same idea. An undervalued project might have strong fundamentals, meaning it has a real-world use case, a dedicated team, and a growing community. But its market capitalization is still relatively low. This low market cap could be due to a number of factors. Maybe the project is relatively new and hasn't had time to gain widespread attention, or maybe it's operating in a niche market that hasn't blown up yet. Another sign of an undervalued project is a unique value proposition. This means the project is offering something truly innovative or disruptive that sets it apart from the competition. It's solving a problem in a way that no one else is, and that, my friends, is where the real potential lies. And finally, keep an eye out for projects with underrated technology or partnerships. Maybe they've developed a groundbreaking blockchain protocol or secured partnerships with major industry players. Strong signs a project might be flying under the radar. Finding undervalued projects is about spotting potential before the market catches on. It's about uncovering hidden gems others overlook, but never blindly invest in something just because it seems undervalued. Always do your research, analyze the fundamentals, and ensure it fits your strategy and risk tolerance. Now that you know what to look for, let's talk about how to actually find these undervalued gems. Think of it as having a treasure map, not to buried gold, but possibly to building long-term wealth and unlocking new opportunities. First things first, research. And I'm not just talking about scrolling through Reddit forums or watching a couple of YouTube videos, although those can be helpful too. I'm talking about deep dive research into emerging trends in the crypto space. What problems are people trying to solve? What are the latest technological advancements? Which industries are ripe for disruption by blockchain technology? Once you have a good understanding of the overall landscape, you can start narrowing your focus. And this is where crypto analytics tools come in handy. There are tons of websites and platforms out there that provide data on everything from market capitalization and trading volume to developer activity and social media sentiment. Some of my favorites include CoinMarketCap, CoinGecko, and Mesacrypto. These tools allow you to filter projects by specific criteria like market cap, trading volume, or even the underlying technology. They can also help you identify trends and patterns in the market. Next, up on-chain metrics. This is like looking under the hood of a car before you buy it. On-chain metrics give you insights into the actual usage and adoption of a cryptocurrency. You can track things like the number of active addresses, the transaction volume, and the overall network activity. These metrics can help you gauge the real-world demand for a particular cryptocurrency. Another hot tip, keep an eye on IDOs and ICOs. These stand for Initial DEX Offerings and Initial Coin Offerings, and they're basically like crowdfunding events for new cryptocurrency projects. Now, I'm not saying you should invest in every IDO or ICO you come across. In fact, most of them won't be worth your time. But by carefully researching and evaluating these early-stage projects, you might just stumble upon the next big thing. And lastly, don't underestimate the power of partnerships and integrations. When a cryptocurrency project partners with a major company or integrates with an existing platform, it's a sign of legitimacy and potential for growth. These partnerships can give the project access to a wider audience, increase its credibility, and drive adoption. So, pay attention to who's working with whom in the crypto space. It could be a valuable clue in your treasure hunt. Alright, so you've found a few projects that seem promising. They've got a low market cap, a unique value proposition, and maybe even some impressive partnerships. But hold on to your hats, because now comes the really important part. Due diligence. Remember that treasure map analogy? Well, sometimes the map leads to a booby trap instead of treasure. That's why it's essential to thoroughly verify a project's legitimacy and potential before investing even a single dollar. Start by researching the team behind the project. Who are they? What's their background and experience? Take a close look at their LinkedIn profiles. Are they credible and transparent about their roles? Transparency is key. If the team isn't upfront, that's a red flag. Do they have a proven track record in the blockchain space? A strong and experienced team is one of the most important indicators of a project's potential for success. Look for teams with a mix of technical expertise, business acumen, and marketing savvy. Next, dive deep into the project's white paper. This is the document that outlines the project's goals, technology, and roadmap. It's like the project's blueprint. A well-written and comprehensive white paper should clearly explain the problem the project is trying to solve, how it plans to solve it, and what its long-term vision is. Now let's talk about tokenomics. This refers to the economics of the project's token. How many tokens are there in circulation? How are they distributed? What's the inflation rate? Understanding a project's tokenomics is crucial for evaluating its long-term value. Look for projects with a well-designed token economy that incentivizes both early adopters and long-term holders. Don't forget to check out the project's community and social presence. A strong and engaged community is a sign of a healthy project. Look for projects with active Telegram groups, Discord servers, and Twitter accounts. Pay attention to what people are saying about the project and whether the team is responsive to questions and concerns. Security is paramount in the crypto world, so make sure the project has undergone thorough security audits. These audits are conducted by independent security firms that scrutinize the project's code for vulnerabilities. A project that has passed multiple security audits is a good sign that it takes security seriously. Next, analyze the project's market metrics. What's the trading volume like? Is the price stable or volatile? What's the market sentiment surrounding the project? Understanding these metrics can help you gauge the overall health and liquidity of the project. And finally, don't be afraid to do some competitive analysis. How does the project compare to its competitors? What are its strengths and weaknesses? By comparing a project to its peers, you can get a better sense of its potential to succeed in the long run. Alright, we've talked about how to find undervalued projects and how to verify their worthiness. But before you go all in on the next Bitcoin or Ethereum, let's talk about risk management. The crypto market is like the Wild West. It's volatile, unpredictable, and full of surprises, both good and bad. That's why it's absolutely crucial to diversify your portfolio and manage your risk effectively. Don't put all your eggs in one basket. Instead, diversify your investments across multiple projects, asset classes, and even blockchains. One popular strategy is the 80-20 rule. This means allocating 80% of your portfolio to established cryptocurrencies like Bitcoin and Ethereum, and 20% to higher risk, higher reward assets like altcoins or even NFTs. Even with strong fundamentals, any project can lose momentum, putting your invested money at risk. That's why it's vital to only invest in this kind of projects what you can afford to lose. Thanks for watching. Don't forget to like and subscribe.